Bitcoin is that it's basically the invention of fast settlements. It finally allows a value to be sent long distances in a way that's practically irreversible, in a similar way that you'd ship gold and it gets audited and therefore that transaction's done. It's not resting on a centralized ledger's ongoing maintenance. And so that's basically what that problem solves. But then it's up against very large network effects. So it starts in 2009. It's tiny. It's up against the $100 trillion fiat currency system, and so it's slowly growing into that. Right now, even at a $2+ trillion market cap, it seems big, but it's something like 0.2% of global assets. Gold at something like a 20 trillion network size estimated is around 2% of global assets. So I think Bitcoin is going to grow into kind of the role that gold fills to some extent, but then potentially has a avenue to grow further still because it's able to solve things that even gold itself as a money can't solve. So there's certain things obviously gold can do that Bitcoin can't do. You can use it in industry. It has all these kind of practical purposes, but as a money, Bitcoin is in many ways more powerful. It's able to beam around the world in 10 minutes, even faster by using some higher layers. And I think another way of kind of thinking about it is because especially with your audience and in general, anyone who's technologically minded, our first thought is, well, the first technology is going to be the one that gets displaced. It's going to be some later thing that comes and displaces it. And the way that I've kind of conceptualized this is that the really big exception for that is communication protocols. Those so far tend to have a very long life cycle of lasting. So whether it's Ethernet, whether it's simple mail transfer protocol, whether it's TCP/IP, whether it's USB, once these things kind of become dominant in their fields, they tend to one, they update over time. So what displaces USB is the next USB rather than literally a competitor. And two, the complexity and the fast moving parts, that tends to happen at the periphery or on higher layers, whereas the core of the system itself is kind of very simple. And I think that Bitcoin is kind of following a similar approach, which is this new communication protocol that exists. And in this case, it's a communication of value. And it's achieved basically network effect dominance. So it becomes increasingly less likely that something within its own field will displace it in a similar way that Ethernet and USB and others have kind of achieved dominance. And therefore, it's going to grow into whatever total addressable market it has, which I think is north of gold's current 2% of global assets. I think that basically people solve the problem they have. And for most parts of the world, people, when they wake up, they don't have a payments problem, they have a store of value problem. That's something that people in developing countries have. And then even in developed countries, we just have a slower version of it is where are we going to store our value? So that's something that basically 8 billion people in the world have as a problem. Payment problems, while some people have them, they're way less universal. Most people in developed countries don't think I have all these payment frictions all the time. Now, certain areas do. There has been, for example, debanking. In certain countries, people have the issue. Like I point out that there's over 40 currencies in Africa. There's over 30 currencies in Latin America. So we can imagine in the United States, if every state had a currency,
Oof.
and imagine all the cross-border frictions, not just in terms of payments, but in terms of cross-state lending and things like that. So if an entity in New York wants to lend to an entity in Michigan, and you're balancing 50 different currencies, and so a lot of the world actually kind of lives under that type of friction-filled system. So especially in a cross-border sense, you're more likely to have payment frictions. So I think that the problem that Bitcoin is kind of filling into, the thing that it's solving, is more that portable store value problem. So it's portable capital. But then around the margins, it can also solve payment problems for those that have it. But then in addition, that's a crowded field. So for example, stablecoins, not for every person, but for a lot of people, stablecoins solve a lot of their frictions as well.
It's a down payment. I think that number is going up. Some of these companies are those so-called DATs, digital asset treasuries, that just buy Bitcoin for their balance sheet. Mackenzie is right that momentum is somewhat fading. But on the other side of the balance sheet, you have a broader set of companies that, just like individuals, want to have 5 or 10% Bitcoin, companies like Figma, companies like Block. I still think that corporate number is going to double over the next year or so. The amount of Bitcoin on the balance sheets are going to go up. And I think there's an even bigger story in ETFs where the flows, from my perspective, are set to accelerate strongly into Q4. So I am still feeling bullish about this market. I take this pullback as an opportunity and not a setback as we move into Q4.
Yeah, again, pardon the pun, but what's up with that? I mean, like what I had to do it, okay? I'm a dad, Matt, it happens. But why are we suddenly talking now about this? All of a sudden, I feel like with crypto every week, there's some hot new meme term that we're talking about.
Yeah, well, they really exploded into consciousness over the last year. Of course, the original DAT was MicroStrategy, or now Strategy, with Michael Saylor hoovering up a huge amount of Bitcoin. A bunch of people noticed that that did very well from a stock perspective, and you saw an explosion of that. To be honest, we probably saw too many emerge, and we're seeing a little bit of a winnowing down. We saw an acquisition of a DAT today that was trading under the value of its Bitcoin shares. But I think people have the wrong perception here. They think these DATs are going to trip over into selling Bitcoin. And I think it's more like their pace of buying is going to slow down. And as I mentioned, they're going to hand the baton to ETFs. So this was a big boom. It's now into sort of a consolidating growth phase. I don't think it's going away, though. Every statistic I look at says they're still buying Bitcoin. They're still buying ETH. They're still buying Solana. Until the data says otherwise, I'm not going to count this trade out.
Yeah, fair enough. But I think to your point, Matt, and I think you might agree with this, it doesn't matter what the asset is, whether it's oil, gas, Bitcoin, stocks, SPACs, CDSs, whatever they are, right? You're going to get a group of companies that see that others are making money, and they're going to rush into that space because it's viewed as easy money. And there's going to be a lot of, I don't want to say bad actors, but there's going to be a lot of sketchier companies. How do we know what's what these days? Because it's a time to be careful in crypto.
Yeah, well, in the DAT-specific space, I would say that size and notoriety wins. The companies that are the biggest are the most liquid, have the most access to capital. They'll be able to take advantage of situations where these smaller players start to trade below the value of the Bitcoin that they hold. So again, we saw an acquisition today with Strive and Semler Scientific. I wouldn't be surprised to see more of those acquisitions. So if I was an investor in the DAT specific space, I would be looking at those larger names at a premium to the smaller names in the space. But more broadly, again, the big story in crypto is institutional adoption. That's still a trade that is gathering steam. So I would look at this sort of Bitcoin sell-off, this crypto sell-off we've seen this weekend, as an opportunity as we move into October, which is historically the best month of the year for crypto. So that's the big picture perspective. On DAT specific, focus on the premier names in the space.